What's up, everyone? It's Karthik with Money Vest. Welcome on board for the market open here. After the long weekend, we are back. Markets are pushing higher. We're very close to closing out the entire month of May. The S&P 500, the Nasdaq are on track to closing green, unless, of course, we see the markets rolling over this week. Got Nvidia earnings. We've got some actual pauses on the trade negotiations between the US and the EU. So hope you all are doing great. Hope you all are energized, ready for yet another crazy week in the markets. And hopefully the audio and the video is working well, and it should be crisper, clear, and a really good video as well, because I upgraded to the latest MacBook 2025, and hopefully it is looking pretty solid. If you guys can also see the screen, just give me a thumbs up. I just want to make sure that the screen share is also working. So if you're able to see my trading view, if you're able to see our MoneyVest platform, just give me a thumbs up. Just want to make sure there are no technical difficulties, and I hope there aren't any anymore, considering the upgrades. So welcome. Matt says, I hate the long weekends. I know. Sometimes you just want the markets to open because, you know, we as traders, as investors, as people who are living for the weekdays, not for the weekends, we definitely do want the markets to be open. We do like Mondays. I personally love Mondays. I don't like the weekends because weekends sometimes get a little bit boring. I mean, I do like to go out, socialize, and of course exercise, do all the things. But you know, if I'm not working, if I'm not looking at the markets, if I'm not doing something productive, it can certainly feel like a little boring. So yes, we're back. Tuesday's here. Markets are open. Good morning, everyone. Thank you so much for joining. What a surprise live stream. Cool stuff. Perfect. Let's make some money. Happy week for everyone. So great. I am going to be looking at putting on some trades on either SoFi or Palantir or Nvidia for the options portfolio. I just posted a brand new update for week number 21, so that you can actually watch. For all the members, you can watch that on Patreon. So this right here is going to be the latest update for week number 21. 5 hours ago, I posted this video. Definitely check it out. Goes over week change, overall performance statistics. And even though the week over week change was negative, because last week the markets were down, my portfolio was down, the differential against the S&P 500 actually went up, because my portfolio was down less than the S&P 500, because the S&P actually was down over, I think 2%, might have been 2% for the last week. So SPX last week was down over 2.6. So 2.6, we're still green on the month by over 4.2%. So we're still pretty solid. Of course, lots of buyers that stepped in on April 7th when the VIX was as high as 60. And right now, we're seeing a little bit of a pullback from last week after 4 weeks of consecutive green. So if you come over to the weekly candle, you'll notice the week of April 21st, week of April 28th, week of April, May 5th, we were slightly lower. And then the week of May 12th, we were up over 5%. Last week, we were down over 2.6. So a little bit of stabilization in the market, as you know, majority of stocks also rolled over off of their highs, considering that we were extremely overbought and stretched to the upside. And so it's very normal for the markets to move in these cycles where we get overbought, technically stretched to the upside, and then see a little bit of a pullback before stabilizing and then, of course, pushing right back up. So perfect. Someone is a workaholic. I love it, man. I love it. To be honest, it's not so much about working. It's more about being productive. So even if I'm doing like other things, as long as I'm being productive, that's really what keeps me going. And, you know, if a day like I haven't done anything and I just stay in bed, I hate that night. I'm like, oh man, I didn't do anything. I was so unproductive today. So, you know, I try to avoid that as much as I can, and really do like the feeling of after doing something productive. The feeling that you get, that for me is the most important thing. Okay, are we doing live trading here or pre-market analysis? So mostly pre-market analysis. I'm not going to be live during market open because I like to use that time to spend, with our Discord community, and of course, actually trading and investing and putting on some trades. Because in the past, you know, as I'm doing a lot of these live streams and I'm doing them during market open, I do miss out on some of the bigger moves, because the first couple hours is where a lot of the volume is, a lot of the moves happen. And so I take this time to do a lot of pre-market analysis, answer as many questions as I can for all of you, and then cut the live stream right before market open to spend that time during with our Discord and of course actually trading and investing as well. So. And yes, Umesh, thank you for mentioning SOXL as well, because I will be looking at SOXL as a potential opportunity for selling some puts as well. However, it is gapping up once again. It's up over 6%. Friday, it was down over 4.7, so back under $16. This is a swing trade that I did take on SOXL, but then of course ended up selling for a nice profit. Same with QQQ, but we'll be looking at selling puts on either SOXL or Palantir. Might do like a buy right. For Nvidia, might sell puts either on Nvidia or NVDL. Earnings are coming up, so lots of potential ideas that I'm exploring right now. Right, I'm sitting on a decent amount of cash in the options portfolio, so we'll be looking at using that in the next opportunity. So, if you have any questions, let me know. Tesla Europe sales did plunge over 49% on brand damage as well as rising competition. So this came out earlier today that Tesla sold 7,261 cars in Europe in April. That's down 49% on a year-over-year basis, according to the European Automobile Manufacturers Association. And Tesla sales have tanked nearly 40% year-on-year from January through April period over in Europe. So definitely something to keep in mind, and what's going to happen with, of course, the overall deliveries for this year. And of course, we're coming in with a pause on a tariff, so easing up on Europe. This was a news that came out on Sunday over the weekend on Truth Social. Trump posted that they have come to an agreement with President Ursula over the weekend that they are going to be pausing these tariffs until July, I think, July 9th. So the both sides needed until July 9th to reach a quote-unquote good deal. And Trump suggested last week that he was not trying to reach a trade agreement with the EU, and imports from the bloc to the U.S. currently face a 10% tariffs. Trump suspended the 20% duty proposed in early April as well. I mean, so it's really just a lot of back and forth. It is a lot of back and forth, that they were kind of raising tariffs and then lowering back down, pausing these. So eventually we all know, the path that we're heading down to, which is some kind of negotiation, and it's nowhere near close to 40, 50, 60%. That's not going to be the eventual rate, as we have talked about on the channel many times over, that if rates stay high for tariffs, then the markets are going to voice their concerns, right? And it's not like investors are going to go out of their way to start protesting, but it's going to be, sell-offs happening in the equity markets, yields rising. That's going to be investors' way of voicing their concerns or showing their protests against these tariffs is by draining liquidity out of the U.S. equity market and, of course, for the rising yields. And that is what, Donald Trump is going to see, that because kind of gauges his political performance off of the strength of the U.S. markets as well. And if that continues to be weak, then of course there's going to be a rollback on these tariffs, as we've already seen in episode number 1 with China. So that's where we are. And again, if you have any questions, let me know. Pump or dump day, dude, I have no idea. As with any of my videos, you'll notice that we don't like to predict, but rather be prepared. Our edge is not in prediction; it is in preparation to be ready for whatever the market throws at us, because there are going to be a lot of curveballs in any given day. Right, so you have to be ready for all market circumstances. So it's not really, trading on direction, pre-biased direction that you're going in, but rather just whatever the market throws at you, you're ready for all market circumstances. Volatility is back over 20, so 78 basis points, but this is still considered as a normal reading. So we are, not in a rare territory right now. So if you come over to our spreadsheet, over here under VIX summary, you'll notice that we are pretty normal. I mean, this 20, 21, 22 levels, anything under 30, I would consider to be like pretty normal, because we're still going to be in the 90th percentile, which, yes, on a percentile basis, you might think that, that's pretty high, but it's not really when you are looking at volatility, because you'll notice that the decimals actually start to increase as volatility goes up. So we're going from 95th to 98th to 99. And look at the difference here between 99 percentile and 99.99 percentile. So that 0.99 percentile is literally VIX going from 40 to 80. So that 40, like the VIX would have to double just to go up from 99 to 99.99 percentile, right? So that's the level of preciseness that we are trading with in the market. So even at 20, mid-20s, low 30s would be considered as a pretty normal reading for the market. It's not until after it gets up to over 50 or 60 that's when we get those buying opportunities. That buying window becomes very, very lucrative. And our job really is to assess the risk and reward. That's really what it is. It comes down to risk and reward. That's all we are here to analyze. Nothing else, nothing more, nothing less. That's all we're trying to understand. So what percentage of cash position do you recommend? So that's going to vary from investor to investor, trader to trader. Really depends on your objectives and your risk tolerance and your goals. What we do have is a liquidity framework that everyone can use to help you navigate in any market environment. Let me see if I can pull it up. Again, this is a new MacBook, so hopefully I am able to look up some things here. So liquidity framework. Okay, so it does open up. There we go. Perfect. So the data transfer from Apple was very, very smooth. So, I actually was upgrading the MacBook after 5 years. So I was very, very nervous doing the data transfer. I just wanted to make sure that everything transfers over, all my apps and settings and spreadsheets and everything that I have on the old MacBook transfers over. And it was a very simple process. Like all you have to do is just plug it in, make sure that they're both charging, and you'd use the migration assistant. And within like 30 minutes, I had myself a brand new MacBook with the exact same settings, exact everything, the data, spreadsheets, everything. It was just like seamless. I was like, that's crazy. Even the wallpaper and everything was kind of carried over. So that was incredible. And again, I'm doing it for the first time in 5 years. So that's pretty new for me. For people who've been doing it for every year, if you're upgrading every year, then, it's pretty normal for you. But so this is the liquidity framework, right? So this is what I like to follow on a very, very close basis where I'm looking at the Money Vest Index, right? Because that encompasses a lot of things, including volatility, market breadth, technical levels, market thresholds, RSI readings. Everything encompasses into the Money Vest Index. And so depending on where we are, I like to play around with my cash exposure in the portfolio. So right now, given that the Money Vest Index right now is sitting at 3.36, so we are pretty neutral, right? We're neutral, we're kind of normal in this market. As you can see in the volatility percentiles as well, including the Money Vest Index, we're pretty normal. And so that tells me that, I want to be somewhere between 10 to 20% cash in my portfolio. And I'm exactly dead center, like I'm 14 to 15% cash in the options portfolio. I'm going to be looking to deploy that if the Money Vest Index actually comes down. So if it comes down, that means volatility is going higher. That means there's better and better deals in the market. There's risk reward getting better. And that's when I will go down on my cash exposure because I'm actually putting money to use and putting that into the market. If we actually start to see the markets rotate back up, because we're only like 4% away from all-time highs, right? So we're very close to all-time highs right now. So if there is any more momentum that comes in, we're getting up to those all-time highs, Money Vest Index back over 3.5 as it was like a couple days ago. So you'll notice that we were sitting at 3.76, 3.8 up until like May 19th, May 20th. We were sitting in that optimistic level. If it gets up to those levels, then once again, I'll be looking at raising more cash, right? So our approach is contrarian, right? That's what you have to do. Like you have to have a contrarian approach to investing and trading in the market to actually steer clear from the crowd way of investing and again, moving against the crowd. And that is to say that when markets are at an all-time high, you're not buying aggressively, rather you're holding back, right? You're kind of more cautious. But when everybody's selling and the markets are at an oversold level and everything's like, everyone's running for the hills and there's a panic, that's when you are being very aggressive, right? So that's the contrarian. And that's what Money Vest Index tracks, is a contrarian way of thinking about market dynamics. And Tom Lee also mentioned this in his weekend update. He mentioned that, a lot of people turn bullish when markets are at an all-time high, which is the exact opposite of what you should be doing, which is like you should be the least bullish when markets are already at an all-time high, and you should be the most bullish when markets are already down 20% from all-time highs, because the risk reward is the best when we are trading at those discounted levels, and the risk reward is the worst when we are trading at an all-time high. So those are some things that we, of course, like to follow. Okay, let's take a look. Thoughts on Apple. So I did my part. I kind of, I talked about this in my Instagram story as well, that I did my part to help support Apple in the next earnings, because I upgraded both the MacBook as well as my phone. So, just spent like over $2,000 on Apple over the last week here. Of course, it's not going to make a dent, but still, I'm doing my part considering that it is down over 24-25% in a bear market from all-time highs. So, I've kind of have mixed views on Apple overall. I haven't really owned Apple in over 4 or 5 years. Primary reason being is because there's a lot of financial engineering that Apple has done over the years. I mean, if you look at the net income, which is the bottom line profit for the company, I mean, it's been rather flat, right? So if you come over to the actual numbers, let's go over to statements, and I'll remove for everything and just include for the net income. Come over to the annual statement. You'll notice like since 2021, Apple's net income has been fairly flat. In fact, the last 3 years have actually gone down from 99 billion to like 93 billion. So profitability has actually been decreasing on a year-over-year basis. But then if you look at the earnings per share, right? So if you look at EPS, which is going to be right about here, so diluted earnings per share, you'll notice that is also that's been mostly flat over the last few years, but it has been somewhat increasing since 2021. It's gone from like 561 to 611 to 613. So the reason for that, of course, is the significant amount of share buybacks that Apple is doing, right? It's using a lot of its cash to buy back its own shares to then, financially engineering. That's what they do, is like increase their earnings per share to make it look like they're growing. But in fact, the bottom line net income and even the revenues have been somewhat flat. So it really has turned into an upgrade business, right? Upgrade cycles, if they actually start to increase from 2 to 3 years to 4 to 5 years or 6 to 7 years, that means more rare spend from users. Like for me, for example, like I'm not planning on spending on any Apple products for the next 5 years. I'm done with my MacBook. I'm done with my phone. I'm going to probably get the iPhone 20 or iPhone 21 whenever that comes out. And then we'll probably get the 2030 MacBook Air whenever that comes out with the M7, M8 chip, whatever they're launching, from now. So for me, like, Apple is more of a necessity now than a luxury. And I don't really have any interest on upgrading every single year, as long as the products are working fine, as long as I'm able to get my work done and I'm being efficient and productive with everything that I have, then I don't really need to upgrade. It's because of the ecosystem that I'm a part of now that is keeping me with Apple. But if any alternative thing comes out, of course, then, the world can change very, very quickly with the Meta glasses and everything that they're doing, which is eventually a future where there might not even be any devices for anybody to operate. So I have mixed views on Apple. I think long-term it is a good company, but we're looking for great businesses. We're looking for the best businesses. And, from those perspectives, it doesn't fit those criterias, right? So that's why I'm a little bit skeptical on Apple as a long-term play. It might still be a good opportunity, but I'm looking for the best opportunities. So that's the whole difference there. Okay, let's see. Thoughts on Apple. So we already went over that. Again, it is, pretty weak on a technical basis. It's been selling off quite aggressively. So still within the context of a little bit of a downtrend. We've got massive resistance here in the $210, $212 levels. And we've got a support all the way down in the 170s for Apple. So a couple times getting rejected there. Support level more reasonable here in the 190s for Apple. So, still within the context of a downtrend. So lower highs and lower lows. Okay, Rack says, I'm too much in cash waiting for the MoneyVest index to be in the early 2s to start putting in. Let's see. So, that's the thing that I also want to address, is the risk of waiting is always going to be greater than the risk of buying. And that's something that we discussed on April 7th as well. Because when you are waiting, what you do create is potentially a permanent loss of opportunity. But when you are buying, what you're creating is a temporary loss of capital. Depends very much on your time horizon as well. But if you are in this dilemma that, I need to wait for the market corrections, I need to wait for the markets to crash in order to deploy all my capital, then it's possible that you might wait a long time until that you actually get that. And case in point is, if you come over to volatility, right? If I remove for all of my technical analysis and I just show you the VIX spikes when it gets up to over 60. So we just saw that on April 7th right here. And prior to that was the Japanese yen carry trade back in August of 24. I'm sure a lot of people remember that. And that was an even shorter buying window than what we witnessed on April 7th, right? VIX got up to as much as 65. I vividly remember this was from 7 a.m. to 9 a.m. Eastern before the markets opened. We were seeing the volatility as high as 65. We were literally very active in our Discord. I had to manually calculate the MoneyVest index back then because we didn't have the automatic updates pre-market. And so I calculated it. MoneyVest index was like in panic 1.5, 1.6, and I was deploying capital. So the difference or the time between these two spikes is August through April, right? So calculate that. That's like 7-8 months, right? 7 to 8 months that you have to wait for the VIX spike. And prior to that is even farther back. Then you're going back to COVID highs when the VIX was at over 85. So the point is that, you don't really get to see a lot of these spikes in volatility. And if you are going to be waiting for those, you might be waiting for a long time before you get that volatility spike again. So this is one of the best metrics to look at, but this is not the only metric to rely on. There are a lot of other things to also look at, because it's possible that if you keep waiting, markets rally 30% and then they drop 10%. And then the VIX spikes. And you're like, okay, I'm getting a great deal. Well, not really, because the markets already are 30% higher than where they were. So statistically speaking, it has never been profitable to be bearish. It's always been rewarding to be optimistic about the market long term. Can that change? Sure. There's a lot of variables at play, most importantly earnings and the leadership and the dominance of US companies. That can always change. But statistically speaking, it's been more rewarding to be optimistic over the long term than it has been to be bearish. And that's, again, just purely looking at the markets over the last 100 plus years. Okay. Karthik pumping Apple stock live. When you buy SOXL, how large over your portfolio is it? So since it's a leveraged ETF, I like to keep it under 10% of the options portfolio. So in this case, I had TQQQ as well as SOXL together, making up like less than 5% of the position. But if I were to be buying more, because I wanted for the markets to, give us better deals, but I had to make do with what we got, what we get. So, that ended up being like a 5% position for the entire portfolio. So I like to keep it under 10%, because of the leverage factor. And I always ask myself, like, that's one of the first things you have to ask is, if this position goes to zero, does that change my life? And if the answer is no, then I'm comfortable with that risk. If the answer is yes, you really want to revisit and rethink how much capital you want to deploy into these leverage positions, because they can be very, very volatile. And one wrong entry, if you don't have the stomach to hold it, can really put a hole in your portfolio. So you got to be extremely careful. And trust me, like, I've sent out so many updates in our Discord. Ask our members, like, I've been constantly warning, be careful, monitor the position. If you are in SOXL, if you are in TQQQ, monitor the position. If you need to take profit, get out. There's always going to be other opportunities, but keep monitoring the position and assess the risk accordingly. Because, like I said, one wrong entry, if you don't have the stomach or the dry powder for it, it can really crush you. Okay, let's see. What do you think of SOXL? I think 1506 was a good higher low. So yeah, got down to $15. We had a little bit of a gap that it also needed to fill in, but I like to keep track of SOXX. That's the ETF that it's actually tracking. We're back above this area of $206, which I'll go ahead and turn this level back into a support. And this is also a bit of an area of demand for SOXX. And we had, like I said, a little bit of a gap that needed to be filled. We do still have some gap that SOXX has in the 195, 199 range. So that is going to be a level to also watch, and a resistance right now that it needs to break out of at 216, 217. So yeah, that's where we are. I mean, got up to overbought levels, obviously at 216, nice little pullback, and now support level is going to be $206 for SOXL. And I'm going to start with selling some puts first, and then we'll see whether I want to accumulate more shares or not. How about United Health? Will you touch it? So UNH, I like a lot as a company. I think it's come down to pretty deep discounted values. Valuations come down to some ridiculously low levels for UNH after a significant crash for the stock. I mean, from its highs of 600, it's plunged like 58% in a matter of like weeks. Right now, back under 300, and this is going to be an area of resistance right now for UNH. Resistance, of course, we got a little bit of a gap to also fill in between 340 and 378. So that is also going to be a gap to watch for UNH. Okay, I'm going to go over some few more questions and we'll listen in to what CNBC has for us. Recovering from a hangover, why bond yields are coming down. So let's take a look at the 10-year treasuries right now. We are seeing the yields back lower at under 4.5. And let's see the 30-year treasury is hopefully under 5. We're at 4.97. So we were hitting highs of 5.15. So again, the tariff pause is big news for the market. That's something that we were expecting the markets were going to be seeing a nice little pump on Tuesday after the weekend news. We'll see how long this stays on for the market. Are you going to 1,000 Nvidia shares before earnings? Are that positive about Nvidia earnings? So it's kind of a tough call. I am optimistic that Nvidia is going to beat earnings because if you come over to our platform and let's say search Nvidia here, and we'll go over to the earnings volatility because this helps us understand past quarters. And if you come over the last 8 quarters, Nvidia has beaten expectations 100% of the times on revenue and EPS. The odds of the stock going higher are slightly more than it going down, but the last most recent earnings, it actually went down by over 8.4%. So I'm optimistic that Nvidia is going to beat expectations on revenue and EPS, and I believe it's also going to provide some good numbers for the future. How the stock's going to react is anybody's guess. My guess is going to be just as good as yours. So what I have to do is be prepared for both scenarios. I already have the covered calls. I already have the shares. And then depending on which way it moves, I will either be adding more or selling more puts to acquire more. So that's going to be the plan with Nvidia earnings. Not doing anything before, but doing everything after the earnings come out. And that's, a lot of trading is actually reactionary. You don't have to be proactive in trying to predict, but rather react to the news and see where that initial inefficiency is so you can capitalize on that. So that's going to be the gameplay there.
Take a look at the pre-market here. We're going to get a nice start ahead of a busy week of some tech earnings, some macro data. We're back in a minute.
Was the audio good? I just want to make sure the audio for the MacBook was also coming in fine without any issues, because I had to set everything up earlier today to make sure there are no technical issues. Okay, audio is good. Perfect. Thank you so much for joining, everyone. I really appreciate it. We got 15 more minutes, so I will go over a few more questions here. Thoughts on Nvidia, we've already covered. I think it looks good to buy more before Nvidia earnings. Just be careful. Again, just going to put in some caution warnings. Nvidia to 175. That would be great. That would be fantastic if Nvidia gets to 175. That would be an insane run-up for Nvidia. It's already gapping up by 2.7%, so that's good to see. Yeah, so pre-market, Tesla's up 2.5% despite the Europe numbers coming out. Nvidia's up 2.7%. We got S&P up over 1.3%, and QQQ is up over 1.5%. So lots of momentum coming in for the markets right now. Possible catalyst for today. I think the European pause, that's the biggest catalyst why the markets are moving higher here. Everything in the shopping list anyways overbought, seems like. Yeah, so technically overbought, but there's still a lot of companies that are actually not that far off from their lows. If you come over to Market Snapshot, it'll give you a bit of an idea on where we are with this market sell-off. I mean, it's crazy, right? That the S&P is like less than 5% away from all-time highs, and Apple's 25% from its all-time highs. Like, it's in a bear market. And another feature that I don't know if you guys know about the MoneyVest platform is if you click on the stock, right, and you go over to fundamental analysis and you look at bear market declines, every single stock is going to have its own bear market decline. So if you click on this, it's also going to show you every single time a stock has actually gone into a bear market, right? And what's the average duration that it's actually stayed at those levels. So this is a dot plot that's showing you the percentage decline for bear markets for Apple and how many months it stayed there. For example, this right here is 1992. That was a start date. Apple stayed in a bear market for 91 months. This right here is for 57 months in 2000s. This right here is 45 months in 1983. This is 40 months, 1987. And these are all more recent. 1999 a little bit. We got 1999. We've got lots of them. 9 days, 14 days, 2 months, 24 days, 2020, 2005. Then we got 1982. Over here, we've got 2012, 2008, 1981, so all those dates. And this is really what it's showing you. And you can customize this. Let's say for the last 5 years, there's been 4 bear markets for Apple in 2022, 2023, and this right here, 2025. Let's see, last 3 years, there's only been 1, which is what we're seeing right now. Is 1 in like towards the beginning of 2023. So that you can also see that, and this is going to show you all of that details that I just went over in a sort of like a table format as well. So all the duration, the ending date of that bear market, and of course the bottom price and the total decline, which has got to be over 20%. That's what makes it a bear market. So you can see that for every stock on the platform as well. What would you buy and hold, SPY, QQQs? I mean, I would say both. I mean, you know, they are different from each other, but it really depends on the risk profile. We've got an ETF list that you can also look at and see all the different ETFs that I have researched for different asset classes, for different objectives and risk tolerance, exposure, volume, assets under management, management fees, issuer. So we take in a lot of criterias to put together our ETF list, which you can download as a spreadsheet and research that for yourself. So instead of SPY, I've got VOO, and instead of QQQs, we've got VUG. And again, I prefer VUG because I like that growth aspect for it, but VOO is going to be just equally good. Just depends on the kind of investor you are and what's the objective. Bitcoin back over 110,000. That's right. Bitcoin's been absolutely crushing it. $110,000 here. And BITX is one of my plays, which is pre-market also higher. Forget about this one, but it's up over 3.7%, back over $60. It is now officially up from the April 7th lows over 100%. You know, over 100%. Absolutely incredible momentum coming in. And I'm looking to add more shares, but obviously not at these levels. 23% off of its all-time highs. Actually, after today's pre-market rally, it is 19% away from all-time highs. So very close to all-time highs on BITX. The higher Bitcoin goes, the higher BITX goes because it's 2 times leveraged. Again, got to be very careful with leveraged plays. I'm going to keep hammering on this point. I know you'll get sick and tired of me hearing about it, but I will keep doing what I need to do. It's my job to make sure that you guys are all aware of the risks involved with leveraged ETFs. Okay, thoughts on Tesla 500 by December. Is that a call, Ray, that you were considering? Tesla, good chance it's 500 by end of year. Also good chance it's $100. True. I mean, it's all over the place, right? I mean, that's why I've got $500 and $600 calls on Tesla. We'll see if it actually gets up to 500. If it does, I'll have to roll those out a little bit farther at a different strike. But it does seem to be forming a nice little bull flag here after the rally. So we got a couple bull flags. You know, you can already see that, you know, we rallied, consolidated sideways, broke out further, consolidated again, and another breakout can happen. And that's going to put us on the target for 430, 450. But it's kind of crazy that Tesla has so much negative news coming out every week or month. Earnings, not great. Missed expectations, decline on deliveries, Europe numbers came up. The stock doesn't care. It just keeps going up. Just keeps going up. It's actually funny. It's literally so funny for Tesla that any news that comes out, you think that the stock would be down on this. But no, Tesla and Palantir, you just can't bring them down. Whatever you do, you can't bring those down right now. The sentiment's so strong on those two companies. Yes, BITX dividend pay on Thursday, correct. So BITX also has a pretty high dividend yield. We're talking over 11%, so 11.6% is the dividend, which is nuts. So a lot of us in the community that actually have BITX are waiting for a big payout. So that should be pretty good in terms of the cash flow aspect as well. But the expense ratio is pretty high too, so you cannot ignore that. It's almost 2%, so got to be mindful of that as well. And folks, the reason I say the leverage ETF got to be careful is because you have to also look at the issuer as well. Because if the issuer is not strong enough, it's not good enough, they will retire and dissolve the fund. Can someone tell me of one fund, very, very popular fund, that got dissolved in the last week, that was traded by a lot of investors? A lot of traders were actually very excited about that one. It's like 3x levered, so it's leveraged 3 times, but it recently got dissolved. Let me see if anybody anybody knows it. There we go. Rax with the first one, FNGA. Yes, so FNGA was originally FNGU, which turned into FNGA. This was your FANG stocks, right? So the 7 FANG names leveraged ETF 3 times. It was incredibly volatile. I don't even know if I can find it anywhere right now. So probably it'll not pull up because it's an invalid symbol and it's got delisted now. So that's why you have to be really, really careful with which issuer, with which fund you are going with. And so if any news comes out, your brokerage is supposed to inform you. I was reading a Reddit post the other day where Robinhood did not even inform FNGA holders as part of their brokerage about the dissolution of the fund. And so they obviously got redeemed for cash eventually. So it's not like your money is lost. You will get the redemption, but once the news comes out, then it basically is flat. It's not moving, right? And so it missed out on a lot of those upside on those gains. So ETN, exchange traded note, exchange traded fund. So yes, ETN. Okay, let's see. Just a couple more minutes, guys. Market's about to open, and then I'll jump into our Discord to see if anybody has questions for me there. I'll get back to everybody as soon as possible, and we'll be looking at the markets to see if there's any opportunities for SOXL or BITX or Palantir, Tesla, Nvidia. Those are going to be some of the names that I'm going to be looking at trading for options or just straight up shares. Expense ratio is really just a management fee that you're paying to the portfolio manager. So it's an annual percentage rate that you're paying to the management. I was thinking why it's not moving and sold it off. Yeah. All right, everyone. So thank you so much for joining in. Really appreciate you all. Drop a like and subscribe. Market's gapping up pretty nicely right now. So we've got Tesla 2.5% higher, just shy of 350. Nvidia earnings are coming out on Wednesday. I'll most likely be live to cover Nvidia earnings and to listen in on Jensen Huang. And we'll see what the company does and what the guidance looks like and how the stock performs after the earnings. And of course, market's also gapping up higher here on the back of the pause between the US and EU. So thanks again. Drop a like, subscribe to the channel. And again, if you want to join and be a part of our MoneyVest community in our Discord, link's going to be down below if you're interested in joining. I will share this link in the chat as well if you're interested in joining. So welcome on board to all the new members. We've had a lot of people join. So thanks again and happy investing. I'll see you all in